Hi, I'm Richard. On this blog I share my thoughts, not investment advice. This is not a recommendation to buy or sell securities. Why investors are becoming obsolete in the age of AI. The investor was once a key figure in the capitalist world. He provided capital to the entrepreneur, someone with a vision, energy, and the drive to build something new. It was a deal. Capital in exchange for a share in future value. And it worked. In some places, it still does. So why am I speaking in the past tense? Because the changes brought by artificial intelligence and automation suggest a radically different future. What was once valuable is losing its worth. The world today is hard to predict. Still, to glimpse the future, we can at least start by observing current trends and underlying laws. When everything feels unstable and uncertain, physics offers a steady ground. In a closed system, energy can neither be created nor destroyed, it only changes form. And these systems tend to equalize over time. Just like pressure balances out in physics, price adjusts in economics through supply and demand. When demand is high and supply low, price rises. When supply exceeds demand, price falls. In both systems, equilibrium is the natural direction. But what happens in a world where supply becomes nearly infinite? Because AI can generate solutions, products, and services without human labor and at near zero cost. Who will create the demand? Who will even want all the results this system keeps churning out? We're heading toward a future where many things simply lose their value. What's worth billions today could be worth no more than a calculator, a light bulb, or a wheel just a few years from now. That's a big shift, isn't it? People are investing their life savings into things that currently seem highly valuable, like autonomous electric vehicles or AI-powered systems automating entire workflows, marketing operations, or software development. But what if, in just a few years, we treat these things like we treat calculators today? I don't think that's such a crazy thought. And if it turns out to be true, it will fundamentally reshape how the world of finance works. Capital will lose its value, and the stock market will turn into a casino. Historically, the biggest barrier to building something was how expensive it was. You had to pay for a factory, employees, logistics, marketing. That's why investment was essential. The investor provided capital that wasn't otherwise accessible. But today, launching a company costs less and less. Automated systems are replacing dozens of employees. AI can code, invent products, analyze markets, draft strategies, and write compelling copy. A single person with access to a powerful AI model can now build something over a weekend that used to take entire teams months to accomplish. What's losing value now is capital itself. And if we go one step further, we might say modern money never had intrinsic value. But let's set that aside. In business, the belief that money had value made it possible to buy time, labor, machines, and services. If people are no longer needed, and the outputs of machines and algorithms become worthless due to infinite supply, then what is capital for? What is an investor for? This was the publicly available part of the article. The full version is available on richardgolian.com.